Greg, I heard that on the clients only call, you were getting a lot of questions about what are you doing with your money right now? Is it the right time to really be investing in rental income property? What was your answer to that?
It's a great question. Folks are saying, well, what are you doing? In all this negative news that we're hearing about coronavirus, what are you doing with your money? Why does it make sense to do it that way? What I shared with everybody is that my approach and what I'm doing with my own money and my investing portfolio of building up rental property assets here in Jacksonville hasn't changed at all. The same thing I was doing 3 months ago, the same way I'm acting today, it's the same way I'm going to act for the next 3 months or 6 months, which is to be building my rental property portfolio, right? The reason that I do that is because of my perspective. I've been through a disruption before, and I've seen how rental properties have reacted in terms of what their rates of return are. And it's also about what my horizon is, how long I plan to hold on to these assets. So if you are somebody who's thinking about what's going to be happening over the next 3 months or 1 year, and that's your horizon, this might not apply to you. But if you're somebody who is buying a rental property and you plan to hold on for a market cycle, which is 10 to 20 years, right? Then what's happening for this short-term disruption with coronavirus shouldn't affect your decision to buy. It would only affect your decision to buy if you felt that long-term you couldn't accomplish the same rental yield or you couldn't accomplish the same home price appreciation. So it isn't changing my approach one bit. The long-term rental yield and the long-term home price appreciation are exactly the same in my thought process here. And I wanted to share with everybody too that I've been through this before in the Great Recession, right? I bought 40 rental properties in 2006 and 2007, and I held on to those rental properties as the market dropped 35% in pricing, 35% from 2007 and 2011, right? So I've been through something that was a much longer timeline in order to actually see the long-term value. But do you know, after holding on to those assets for about 15 years now, that the long-term average appreciation rate for those assets is over 4%, right? So even in the greatest drop of housing prices that we've seen, hopefully we'll ever see, my long-term approach still netted me over 4% appreciation on average. And my rents have been consistent the entire time. So that's why this doesn't really change my approach. But I know not everybody has that same perspective. And I don't want the constant negative news cycle to hamper people's plans and investing decisions, right? Because I know that this is going to perform in the long run for folks. So one thing we're doing for current clients, and this is really temporary for us, we don't do a lot of incentives. We actually don't do any incentives in the past. We're not going to be doing it in the future either, but just to help people in this time of constant negative news cycle, for folks that put properties under contract this month, we're actually guaranteeing their mortgage payments for them, which means that we're making a payment to them in the event that their rents would not be coming in because of, whatever is coming down the pike, right? JWB is that backstop for you. Basically, we are making a payment to those clients for a period of up to 6 months for any rental loss that they would incur. And that payment would be equal to what their mortgage payment would be. So we do this because we want to give people peace of mind, to help them continue their rental property investing goals. And it's really for clients and for new clients that put properties under contract through the end of this month. So we hope that helps.
That sounds like an incredible little incentive to kind of get over that fear of what's happening right now. And then once you take that off the table, once you take the downside to why maybe you want to wait, is there any upside to waiting? Like, is there on the other side of it, does it make sense to wait a couple of months for a deal or something like that?
That's a great question. So we've kind of talked about the rental property part of or the rental income part of the equation. Now it's really pricing, right? You're hearing all this negative news and you're saying, well, if unemployment's rising, is my housing, does it make sense for me to wait 2 months or 3 months? Am I going to be able to buy that same property for less cost, right? What's going to happen here over the short run because of coronavirus is that you're going to see that there is going to be a big difference between people that are distressed sellers and non-distressed sellers. The same thing that happened in the Great Recession, right? In the Great Recession, there were a lot of foreclosures and there were a lot of distressed sellers. And for those distressed assets, people needed to sell at a discount, right? For non-distressed sellers, people stayed in their house, right? And then once they were able to sell for market value, true market value again, that's when you start to see home sales rise. So there's a big difference between distressed and non-distressed pricing. Now, if you take that across what we're seeing here for coronavirus, you're seeing that this universally is accepted that this is a much more temporary effect, right? There will be a much more temporary effect to the housing market as well. So for those sellers who are distressed, they may drop their prices because they have to, right? There's a distressed reason. But anybody who's not distressed is not going to be dropping their prices. They're just not going to sell right now, right? So when you think about the opportunity to invest in a turnkey asset, you're not going to be seeing turnkey providers like JWB, folks who are not distressed. You're not going to be seeing prices drop because we know this is temporary, right? And more than anything, it's because the return on the investment is strong compared to other asset classes. Returns on rental properties are between 7 to 9%, and it's consistent. And you compare that to what you could be getting in the stock market, right? Stock market, February 12th, reached an all-time high of 29,550 points, right? It's now around 20,000, right? Stock market investors have seen incredible variability in the short run. So at the end of the day, you're not going to see housing prices drop because of coronavirus. And so to answer your question, no, I don't think there's a reason to wait. In fact, you could actually make an argument that there's a reason to do it sooner rather than later, because we do expect to see interest rates continue to fall. And there's ways to take advantage of that. And when you can lock in for a low interest rate, the effects of positive cash flow for your investment are going to be so long lasting when you have a buy and hold mentality, 10 to 20 years at full market cycle, and you have that fixed rate loan in there. So no, I don't think there's a reason to wait at all.
So if I'm hearing you correctly, then it's the properties that are going to drop in price are more the properties for somebody that's looking into like a flip deal or a shorter term investment or like a wholesaler or something like that. Whereas if what you're looking for is to be actually passive, then this doesn't really come into the equation. So you're really just making the decision of if you want to be hands-on or if you want to be passive, if you want to wait.
Yeah, I think that goes into it, right? If you want to be a deal maker and you want to find some situation where there's a distressed asset because people in the large scale are struggling, I think you could go out there, pound the pavement, and find a deal that maybe you wouldn't have found, 3 months ago or 6 months ago. And I'm sure that's going to be an option, but if you are somebody who is looking at this as an alternative to investing in the stock market or investing in bonds, right? And you are somebody who is busy and you want a team to handle everything for you, you just want it to perform consistently, I don't see any difference as far as the long-term value. And I don't see any reason to wait for 3 months because I don't see you getting a better deal at that point.
Could you, based on everything that you've told me about months of inventory and how it's like historically low right now versus the actual average, could you see a situation when all of a sudden, if this thing flips, prices are gonna increase for homes?
Well, I think prior to coronavirus, as you mentioned, we had much lower months of inventory than an equilibrium market. And that meant that we had too much demand for too little supply, right? So that's been the basis since 2014, actually, when JWB started to track this. 6 to 7 months of inventory is an equilibrium market. We've been at 2 to 3 months of inventory at least since 2016, and even since 2014, we've been below 6 months of inventory. So the fundamentals of the real estate market would lead you to believe that there would be higher than normal home price appreciation. Now you throw in this crazy disruptor right now, which is going to change things, right? It's that black swan event. But it would make sense that that pent up demand that you're having during this disruption would lend itself to those fundamentals that would show a higher than average home price appreciation. So to answer your question simply, what you're going to see is a sharp rebound in housing after the coronavirus effect is felt and realized and solved. And I think you're going to see a huge migration of funds from the stock market into alternative assets like rental property investing for sure.
Makes a lot of sense. Sounds good.